You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody, that music means it is time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting The Options Insider Radio Network. Hope you guys are enjoying the slew of new content hitting the network here in this new year, indeed this new decade. We're going to keep the ball rolling here, bringing on some new guests to the network, including our next guest. He's a newcomer to the program and indeed to the network. He is Stino Milito, the Co-COO over there at Dash Financial Technologies. Stino, welcome to the Options Insider Radio program.
Thank you, Mark. Appreciate the opportunity to be here.
And Stino, as we want to do with all of our first-timers here on the old network, why don't you go ahead and give us a little bit of an overview of your background in the financial markets, as well as what it is the Co-COO does day-to-day over there at Dash.
All right, sure. Sounds good. So, I started out in this business as a market maker on the CBOE. Basically graduated college in 2000. Went right down to the floor. Started with a firm called Boda Capital Management. There's actually quite a few Boda alums still around in the industry.
Quite a few you floating around over there these days.
There's quite a few. There's a handful at Dash, and there's several throughout the industry still. So I think they did something right over there. There's a lot of guys are still around. Some 20 years later.
What did you trade with Boda?
My primary product was eBay. So my pit at eBay, Dow.
You were way in the back of the floor over there then.
Yeah, we're going back, but eBay was our main product that we traded. Sort of in the early 2000s there.
Inauspicious time to come on the floor because obviously early 2000 was a bit of a downturn.
We were definitely, I'll never forget interviewing for that job. Very intimidating thing to do. It was it was late in my junior year, maybe early in my senior year. And, the guys, just the excitement, which was on the floor when I started, but just the excitement and sort of what you felt was in front of you was, the energy and just, it was really unmatched at the time. And, things definitely changed. Again, I started in June of I graduated on a Saturday. I was there on a Monday. Went through a training program, a very good training program at Boda. They did a really nice job with it. Was on a seat by April of 2001. And, a lot changed in the next, 12 to 18 months. It was essentially the beginning of, volatility coming down, and it really hasn't stopped for 20 years now. So, I saw a lot. I went from Boda, quite a large firm. We probably had close to 200 traders when I started. And I would say within 24 months, I might have been the 20th or 30th most senior guy that they had. I mean, there was so much turnover. That's really when guys started to lose money. Guys were back then. Everyone was long vol. So as that trade collapsed, so did a lot of P&Ls, and really was the beginning of this industry changing.
Yeah, obviously the meltdown in early 2000s, the end of the dot-com boom, then of course 9/11 later in 2001. It was an inauspicious start to your trading career. I don't envy you, sir. I started a few years earlier in 1997, so I was fortunate enough to have enjoyed the tail end of the dot-com boom there on the SIBO and all the madness that ensued down there and the thousands of people fighting to get on badges and the multiple listing, all the fun that happened in that era before the meltdown. You kind of just came in for the meltdown, so I don't envy you that. But obviously, let's fast forward a little bit now here to your day-to-day over there at Dash. What does the Co-COO do over there at Dash day-to-day?
Personally, I touch a lot of areas of the business. I've, managed sales last year, kind of co-managing the technology operation with Peter Maragos, our CEO. This year, sort of a big focus, but, touch all areas of the firm. I've been with Dash since it launched in 2010, really. It's been a pretty wild ride. I mean, obviously the company's growing, a considerable amount in that time, and we've become a real force in the options world, and in the routing and execution side of the business. So it's there's not many dull moments at Dash. I'm busy. Everyone here at Dash is busy. There's really no such thing as a slow day around here. So it's good. It's fun. Keeps you on your toes.
Well, 2020 kicking off an interesting year. This is our first chance to catch up with Dash here in the new year and indeed in the new decade. So let's start by looking back in the rearview mirror really quickly. 2019, obviously, an interesting year from a broad markets perspective, interesting year from a options and indeed a volatility perspective as well. What were some of the highlights for you guys over there at Dash in 2019?
Yeah, I think, obviously 2019 was just that. 2019 was was an interesting year. Obviously market up huge. Again, volatility sort of continues to come down. In 2019, we continue to grow in 2019. Probably not our best growth year, but we still grew. Worked on building a lot of the technology and a lot of things that we're launching here in 2020. So I think that's what we're sort of really excited about, was a lot of the groundwork, that we laid for some of our really key products last year. And obviously, really setting the groundwork for the ATS here, which is, I think, what we're most excited about in 2020.
Well, let's talk about that then. The old ATS, it's been an interesting subject to watch evolve and change over the years. Obviously, some of our listeners probably familiar with its earlier incarnations, now obviously part of the Dash empire over there. So let's talk about that a little bit. You guys obviously are excited about the ATS. What is it that's really exciting you right now? Why is 2020 going to be the year for the ATS over there at Dash? Yeah,
so I think, with the ATS and what we've done with the ATS here at Dash, it's really different from a traditional, ATS. So I think, ATSs, I think, are synonymous with, equities. They're really not much of a, they really don't have sort of haven't had a big place in the options world to this point. And what we've built, it's very different from that traditional ATS model. Ours is really more of like an RFQ mechanism. Okay, so what we do is client sends us in an order. If it's what we deem as marketable, if we deem that as the midpoint or better. So there's an opportunity for that order to trade. We, electronically send out essentially like an RFQ to all of our liquidity providers, and market makers within the ATS, and then they come back with a response. And if that response improves the NBBO, in price, and or size, we have a paired trade. Okay. We then take that paired trade down to the exchange and cross it. Okay, so what's really unique is, really there's a couple things that are really unique about that. Number one, we're giving our clients access to potentially, better and deeper and more cost-effective markets. In a lot of cases, the quotes you see on the screen, they're very defensive quotes, as we say. Okay, so what does defensive mean? It means, hey, a market maker has to stream, dozens, if not hundreds of symbols, really thousands of symbols if you look at a whole firm. And they're going to put those markets up there where they're sort of saying, okay, I have to put up 1,000 markets. This is where I am for these quotes. But if you want to hone in on a specific, option, I might have more signs there, or I might have a little bit better price there. And what our ATS does is it allows, a market maker to say, hey, for that option, hey, I actually have, 1,000 there, not the 200 you see on the screen. So when our clients are looking for, additional liquidity to what's on the screen, or, again, potential price improvement, because obviously the market makers, sometimes, can and will improve the price, we're able to source that in a fully electronic workflow, okay? Now, what's even better is when we do have that, pair trade in our ATS, and we put up that cross at the exchange, it goes through a auction mechanism at the exchange, and once again, that order becomes eligible for price improvement. So, there's a lot of benefits to our clients' flow for going through our ATS. We did a really nice job in 2019 of adding some really significant market makers and liquidity providers in our ATS, which is something we didn't really sort of have at the beginning of 2019. So it's made a really big difference so far. It's driving real value for our clients, and we're really excited about it.
And you kind of mentioned it as a bit of an RFQ, a price improvement, if you will, over the existing kind of somewhat defensive NBBO that we've seen out there. So how would you say your RFQ mechanism, and your price improvement that you guys are offering, how does that compare to what we're seeing on the exchanges, who are all also out there, effectively using the same liquidity provider, saying, hey, we'll price improve your orders? How does your price improvement kind of stack up against that?
So I think there's a couple things. I think price improvement is, one component of what clients, get with going through ATS. I think the other really important thing is there could be not just enhanced liquidity. Okay, so there might not be price improvement, but we might have more liquidity within the ATS because it's a non-defensive quote. Another really important thing is sort of exchange fee mitigation. So if an exchange, let's say a maker-taker exchange, is the only exchange on an offer, we got a guy coming in to buy some contract, it could cost, 30, 40, 50 cents, depending on the exchange, whether it's a penny name or a nickel name, to remove that liquidity. Now, if we can find our clients some enhanced liquidity, if we can just find it with no price improvement, but we're on that offer, our clients remove, they're not going to pay those exchange fees, which is a substantial savings. So if we're talking about, a 50-cent exchange fee that we're able to save our client, that's half a penny in actual net cost, to our clients. So, there's a lot of benefits, and you could define price improvement by just improving the bid of the offer, but there's also an exchange fee component too. Again, that's really important and really valuable.
Now, you mentioned at the top there that there really haven't been any real ATSs in the option space. You guys pretty much have the only one. It was conceived way back in the day in the early Liquid Point days, and you guys obviously have evolved it and taken it over since then. Why do you think that is? Why do you think other players haven't really materialized in this space? Is it because there's already, close to 20 options exchanges out there right now? Maybe they don't want to compete on that level. Is it a regulatory issue? What is it that's really prevented others from entering and creating more ATSs for options?
So I'm not 100% sure. I think we are up to like 16 option exchanges. I guess what I would say, when pressed is, I don't know that anyone's ever had sort of the size and scale that Dash has to make it a value-add experience for their clients. We're currently routing, about 16% of the daily OCC volume, Dash is routing. So it becomes a really significant liquidity, pool. And, it becomes that for both the market makers and our clients. So, if you were trying to get these market makers together in some other sort of environment, look, there's already enough exchanges that don't do a lot of volume that a market maker is like, do I really want to be a market maker in that exchange, or is it worth it, or should I quote there, or how should I handle that exchange? So if you had another sort of broker dealer that said, hey, come right to my ATS, build a response mechanism, because this is all automated now. There's no human interaction, right? So the market maker firms and the off-floor liquidity providers, they've got to spend time and energy and money in writing and building the technology, to our spec, to interact with this flow. And with the amount of volume we do, it's worth it to them to make that investment. So, I would just say that, maybe nobody's ever done it, but I would just say it's never really been worth their time because nobody's had, sort of the meaningful liquidity or the meaningful flow that Dash has, where it drives value for both parties. So.
That's true. There is a bit of a network effect going on there as well. Someone just spools one up. You still have to have the flow routing through this. Speaking of the flow, 16%, that's not an insubstantial amount of flow routing through you guys. So if you guys were effectively a standalone exchange, you'd be up there with some of the big boys there, Stino.
We would be. Yeah, I mean, look, it's been a, it's impressive, and it's something, I'm very proud of. And I know our whole team is very proud of because, it wasn't that long ago, we started out with, just like everyone else does. We had to get our first client. We've grown, and I mean, we've grown fast. I mean, again, 2010, we really officially sort of launched as our own company in 2012. When we bought Electronic Broker Systems and spun out of another broker dealer where we were sort of incubating the technology, and it's been a good run. And I mean, in all honesty, it's a testament to two things. I mean, it's a testament to our products. Our products work really well. I mean, we're driving value for our clients on the routing side, and it's a testament to how hard our team has worked and do work today. You don't have the success that we've had, and not have a strong team and not have products that drive real value. It's just, you could do that and be small. You could do that for a little bit, but you can't do it for almost a decade now and get to the size we are.
This is pretty much the closest thing we have to what is effectively a dark pool here in the U.S. I know that's a bit of a loaded term, but it approximates some of that functionality. Obviously, when you're talking things like dark pools, there's a couple of concerns people usually bring up. Usually the first and foremost is transparency. And, of course, when you're talking RFQs, there's also that added concern about latency maybe in there as well. So how do you address those two concerns, Stino, of maybe people worried about the transparency of your process and also maybe the RFQ slowing down their orders a little bit?
Sure. So, speaking with the dark pool, so what, a couple big sort of distinctions. This is not a dark pool, or an ATS in the sense that orders rest in there, right? These are marketable orders, right? We're sending an RFQ. These are immediately actionable, so we get a response. Again, if we match the NBBO in price and or size, we have a paired order we take to the exchange. If there is a residual, we will simultaneously actually go to the exchanges to remove the screen. So from a latency perspective, it's adding about, just ballpark, about 10 milliseconds, okay, to the order up front. In terms of a performance perspective, our yields on the back end, meaning our ability to capture the screens post the ATS wave, okay, are coming in at 99%. Okay, that's compared with 98.6% yield capture for a non-ATS wave. Okay, so let me just sort of let me just unpack that a little bit better for you. When Dash goes to aggress the screens and remove liquidity on the screens, it's one of the things that we believe we're strongest at. We're capturing 98.6% of what we see. So if there's 1,000 on the screen, our client goes to buy 1,000. On average, we're getting 986 contracts. So our slippage is very minimal there. It's only 1%. What we've seen, okay, on our ATS flow is when we add that 10 milliseconds of latency, because this is something that we've watched very carefully in 2019, we're getting 99%. So basically, statistically, it's the same thing. It's 0.4% different. So there has been no meaningful degradation in the fill quality, and in fact, slightly higher. But I would just call it, the same in terms of our ability to capture the screen. So not only are our clients getting the benefit of going to that ATS, we're still able to capture the screens. There's nobody better at capturing the screens than we are.
Well, I want to keep talking about the ATS, but there's some other things cooking over there in the Dash hopper as well, in particular on the volatility side. We have one or two listeners who like the volatility market and are interested in what's going on over there. What does Dash have up its sleeve these days? Some new products out there for folks who are trading in the vol space these days, Stino.
So we do have some new products in the vol space. Coming out here in 2020. I think the primary one being our Vega Trader, which primarily will allow some larger institutions to trade. Kind of like, if you want to call them Vega strips, if you will, but where sort of a client. We get these to some of our sell-side banks where they say, hey, I want to buy 20,000 Vega and Fab in, this name, and I want to do it over these 6 strikes or these 8 strikes or these 4 strikes, whatever, it's all user defined. We built, some product this year, which will allow them to go in there, just sort of click on those strikes, put in their Vega that they want, send an order, and then we'll aggress the screens there, and we'll sort of manage that, that Vega number for them. So whether, obviously in that case, doesn't matter if it's, it's calls or puts. Obviously Vega is the same thing, but they can choose those strikes. So we'll go out there, we'll manage that for them. That's a nice product that we obviously actually built in 2019 that we're launching here in 2020 as well. So that's what we're focused on there.
Well, Stino, it's been a pleasure getting you guys back on here to get a little bit of a catch-up with all things cooking in Dash on the vol side. We talked about the ATS quite a bit. That's certainly pretty interesting as well. That said, before we go, if you want to leave our audience with a little bit of a hint, a little bit of a tease of maybe what else you guys have up your sleeves, if you got any other nuggets you want to share with us, Stino, now is the time. The floor is yours, sir.
No, I don't. There's no secrets at Dash. I mean, Dash is all about transparency. It's what we were built on. It's what we do. Again, we are really excited about the opportunities that the ATS is going to present our clients this year, and it's one of our big focal points. So I think you guys will be hearing a lot about it in the coming weeks and months.
Well, Stino, glad we can get you on. Give us a little bit of an overview of what's cooking under the hood over there in the ATS for 2020, and we'll look forward to seeing how the ATS and these new vol products and everything else, how they all unfold in the marketplace in the coming months.
All right. I appreciate the time, Mark. Thank you very much.
All right, and that's going to do it for this episode of Options Insider Radio. But stay tuned for the network throughout the week. A lot of great content coming at you pretty much every day this week, and we'll be back at you again next week with more Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.